It's now time for our weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, U.S. markets are closed for Thanksgiving. The TSX is open, but a bit of a quiet day. We did, however, see both U.S. and Canadian markets move higher Tuesday and Wednesday of this week. The key event, of course, being the FOMC minutes, which were released Wednesday at 2 o'clock, which indicated that most Fed members believed that they should slow the pace of tightening. However, some members also believe that the terminal interest rate, the interest rate at which they will stop raising rates, might be higher than previously thought. That would have been hawkish and you would think sent the markets down, but the market takeaway was that it was on the dovish side and markets moved higher, particularly the growth areas of the market. As it relates to what we're seeing here in Canada from a rate perspective, the Bank of Canada Governor Tiff Macklem did indicate that we need to continue to raise rates in order to combat inflation. In other words, it doesn't seem as though the rate rises here in Canada are going to slow down anytime soon. He went on to say that if they had pulled back pandemic stimulus spending sooner, that would have limited the inflation effects that we're dealing with today. As we look closer at the markets, the TSX, as I mentioned, did move higher on Tuesday and Wednesday of this week, with most sectors higher as well, with particular strength in financials, materials, as well as industrials, where you saw the rails, aerospace, and transport move higher. We did, however, see some weakness in the real estate market and also energy. And WTI has seen some weakness as of late, trading below that $80 mark, down by about 3% or so. Canadian dollar, however, is moving a little bit higher versus the U.S. dollar, so some strength there. And stock-specific news here in Canada, I'd keep my eye on Alimentation Couche-Tard. They did come in with less than expected earnings results, less versus expectations, sending that stock down by about 2%. It's always interesting to keep your eye on some of the retail stocks within the marketplace to give us a read in terms of what's going on with the consumer and, of course, the effects that everyone's feeling on the inflation front. Away from that, as we look at the U.S. markets, stocks, as I mentioned, did move higher over the past couple of days. It seems as though the peak inflation narrative is what is driving those U.S. markets higher. In other words, investors believe that we are not going to see inflation move higher from where we currently see it, and therefore the U.S. Federal Reserve will, in fact, really slow down that pace. So that is the narrative in the United States. In terms of the big picture story, though, we're watching very mixed earnings results and also mixed economic data. On the economic data front, we did have both flash manufacturing and services come in below expectations and actually contracted. We also had initial jobless claims coming in higher than expected, so another negative there. However, home sales, new home sales, I should say, did beat expectations. So again, a bit of a mixed picture and a mixed reading. As it relates to the earnings results, Nordstrom's in the retail space, of course, did come in with better than expected results, but did highlight concerns surrounding margin and margin pressures, perhaps from some promotional activity within the retail space. You get higher promotional activity if retailers can't sell through their inventory. So they're just going to discount it, mark it down, get it off the books and out of the warehouses. That is not really a good sign for retail and does give you an indication in terms of perhaps the consumer slowing down. We also echoed those comments or sentiment from Guess, the retailer Guess. They did come in with a lower than expected results. However, as I mentioned, we do have a mixed picture as relates to earnings. Deere in the industrial sector did come in with better than expected results, sending that stock higher. And also, I should just point out, as it relates to some of the growth stocks, they got a bit of a boost, the sector from Tesla, which moved higher to the tune of 7%, following an upgrade over at Citibank. And just to put everything into perspective in terms of where we stand, we have had a nice rebound in November. But on a year-to-date basis, the Dow is still down 6%, TSX down by about 5%, the S&P down 15%, and the NASDAQ down 27%. But as I said, we are seeing a bit of a rebound in the last quarter of 2022, with the Dow up 19%, the S&P up 12%, and the NASDAQ up 6%. So All to say, we have seen some stability, some move higher, a lot of losses to recoup, and there's been a lot of damage underneath the surface. So you may have stocks down that are much more significantly than the broader markets. And we'll take some stability and some knowledge in terms of where we go from here on a rate perspective to kind of recoup, I think, some of those losses. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here.